Good morning, everyone. This is Brad Matheny. Today is the 31st of January, end of the month. And we're looking at a fairly strong open here, 607.95 on the SPY. We filled the gap up here, which aligns perfectly with my gap potential. Now, the topping pattern didn't really show up yesterday, but given where we're at right now, given the fact that we filled the gap, and given the fact that we may see a rollover up here after filling the gap, may play out very well for my topping pattern and potential breakdown today. We're going to see how this plays out. I mean, the SPY is up already 0.5% at 607.80. This is a pretty high move. We've already filled the gap. I'll show you the ES maybe a little later. Looking still for that rotation into this downward trending. Now remember, come back here. Next week, we end up with a breakaway trend and then a rally, which may, if we don't get a breakdown today or on Monday, may push us, these two rallies that are in carryover and trend mode, may push us back up to new all-time highs. So if we do not get that breakdown that I'm expecting right now, off of this rollover on this gap, we're going to see how it plays out today. If we do not get that, we could roll back into a new all-time high again by Tuesday, Wednesday or so of next week, and then potentially roll down into the DeepV. Now, at this point, the DeepV breakdown, if down into this area, is looking less and less likely because we're holding up here in this upper area. So be aware that, at this point, maybe the 590, 588 area might be the DeepV low coming up around February 11th, 12th or so, maybe a little earlier. But, we saw this huge breakdown up here with rejection. Need you to be aware, and let me just check something. Color bars based on previous close. We need to be aware that, the markets are struggling to get out of their kind of own way right now. They're in this range. We've got rejection here. It could happen again. Prompted a big breakdown. We'll see what happens. I mean, this is getting into kind of a very strenuous, tentative type of a mode here up near the top of this market. I would say that these rallies have me a little concerned going into next week that we're going to push up to new all-time highs again and then roll downward into that crush pattern. Remember, we've got the evening star set up here, the gap defender, the base rally, Harami inside crush, and that moves us into our secondary bottoming formation around February 21st, which is back over here. So, if we don't get this breakdown into these lower levels and we get a breakdown into these levels, we could be looking at a range more in the lines of this. The blue lines here indicating that we're moving back down into the 590 area, which would still be a fairly sufficient breakdown, but maybe not down here into these 570 areas. So we need to see how this plays out, because we could be up here into new all-time highs, carrying over before we potentially get a breakdown move and secondary breakdown move rolling back up and out of this. Right now, as long as we do not get below this, call it 593, 592 area, in fact, I've drawn it. Let's just keep these moving all the way out. As long as we stay above this zone of support right here, see if I can get to this. There we go. As long as we stay above this zone of support, we are likely going to stay in a relatively strong upward channel. So be aware that, this 595, 594 and a quarter area right now, as long as we stay above that area, and we do not breach that lower 594, 593, 592 area, then we are likely going to stay elevated up in this area, and this will act as support. If we get below that 592, 593 area, then I think we've got a pretty good chance of coming down here and retesting these lows. Right now, though, like I said, we've got the major topping formation, and we should be moving into weakness. In fact, let me check over here. Come back over here to the cycles. After the 20th, we move into a breakaway and a V bottom on the 9th, and then a major bottom peak on the 10th, and then we move back into strength, and then on the 21st, we move into weakness, setting up a major bottom. So again, I'm expecting this V bottom and this bottom the day after, 9th and 10th, to be a fairly deep low. That's why I had it down here originally. But now we've got to see how this is playing out. The markets are, and that's what I try to do. I mean, I'm not trying to, you know, change my analysis, but let's face it, guys, that's what we do as traders, right? We make a determination. We believe that we're looking at a longer term potential rollover top here with weakness. This confirmed beautifully in this sideways downtrend. Now we're recovering back up above this gap area. We filled the gap. I still have that DeepV bottom around the 9th and 10th. Remember, that's right over here. It's actually on a weekend. So we have Friday, and then we have Monday is the 10th. So that's where our DeepV bottom is coming, right here in this area. I'll draw a line right there. There's the 10th. And like I said, we may be DeepVing right in this area, 592, 591, 593, or we could get a very big breakdown, a very sharp move over here off of these potential highs. And I would imagine it would be something, news based or earnings based, but in theory, we could come straight down into this support zone trying to find some support here. So ultimately, we need to see how this plays out. I'm actually quite surprised that we're getting back up to potentially new all-time highs again, but we're not there yet. So we'll see how it plays out. Okay, the QQQ. Last I looked, see, way off of all-time highs. We're getting these lower high cycles. So again, come here, move these to the front. We're getting these lower high cycles. Come in here and highlight them, rolling up here, rolling over here maybe. And let me do that again so you can get a better feel. Coming down into here, potentially rolling here, and moving potentially down into our low cycle, which I think is still pretty clear, indicating that we would have to be very cautious of this support level. I'll make this a little bit bigger so you can see that becomes our support zone. Why is that a support zone? Well, that's the last big rejection area, the most recent rejection area, the most recent standout low. And like I said, if you want to learn more about my work, take a look at some of my videos. I do videos every day, but last year, back in July, August, September, I was doing a bunch of training videos for everybody. They're called The Mechanics of Trading. They're all up on TradingView's site. You can go get to them. I wish I could pin them for people to be able to see, but I think you can go do a search there. If you come to my profile, I think you can search, show all tags, I think I got it as mechanics, I think. No, I don't have them listed. Support, resistance, training. I don't see them. Less tags, YM, training. Yeah, come click on training. Using Fibonacci, simple method evaluating trades. Okay, and then the other one would be Fibonacci, probably. So I'll come up here to Fibonacci. I guess I spelled it wrong here. Okay, cycle. Yeah, I spelled it wrong. So you got incorrect Fibonacci, and you got Fibonacci. And then let's see if there's something else. Fibonacci retracement. Looking at support. And let me see if there's anything about Fibonacci price theory. Nope, nope, nope. Trying to see here if there's anything that stands out for you to be able to search. Support resistance, technical analysis, technology, tech trading system, training we did. Trend analysis, U.S. equities, U.S. stocks. I guess this would be it. Yeah, I wish I could do a search just for a single word. So let's go ideas, published, less filters, and all tags, filter ideas, search symbol. So probably, no, we don't have any. It doesn't look like there's any search settings here. Commented, followed, boosted. So yeah, I apologize. It's called the mechanics of trading. And you might just have to go all the way back and look for them. But I did a bunch of videos, 13 videos called the mechanics of trading, all about Fibonacci price theory. And like I said, I don't have, can't seem to get to a search criteria to do any searching. So I should have probably done the, uh, let's see if they have anything here, because there's analysis, emerging market energies, cryptos crash, learn to trade. Well, let's see what's there. Learning Fibonacci price theory, training for oil, NASDAQ, NDX, predictive modeling, price patterns. Let's see, price patterns. Yeah, I'm going to have to change the way I do it, see if I can edit those for you. I apologize. I thought that this would be easier to get to, but maybe I'll write somebody a trading view and see if I can get them to create create uh, structures for the videos that we create, so we can organize them a little bit. But anyway, let me go back over here. And so the QQQ is setting up in the same type of a pattern mode. We're looking at that rollover. We're looking for that topping pattern. We're into this gap potential today. And then we move into the breakaway on Monday, into 2 rally days and a counter trend rally day. Pay attention here. That is a counter trend rally day, which means we should be going down, then a carryover. Then we get that evening star island formation on the 10th. And again, we're about a week away. So what really, determines what's going to really play out here is what happens today, and what happens Monday, and what happens Tuesday. We still got this open gap here. We're trading up here at 527.32. So we have not yet filled that gap. We could, okay, today. And if we roll over and start to move back down, like I said, we've got to watch this zone. This 510 to 514 area is the most recent support zone. If we fail to get up above this high at 533.88, then this would be technical failure. And let me mark this as a red. It would be technical failure right here, trying to get above this high. That means we would immediately look at this low as a target area. So again, very important to see what happens here. Very important to see how we're rotating. Remember, I highlighted that we're in the middle of this 382 to 618 zone. Now the SPY has held up a little bit better. So when you come in here, I highlighted the 382 and right here, 618 zone, this middle box, we're dancing right around that. And to be honest with you, I really think that, if I come in here and go to 2 hours, you can see the big breakdown. You can see where we're at. You can see we had the deep selling at the end of the day. Yeah, we're in the midst of earnings. Earnings are coming out okay, but they're really pointing to slower economic. I really think that now that we've filled this gap, we're going to probably get a big rollover, potentially back down into this 598 area. It just makes sense to me, like I said, that, we're looking at that topping pattern setting up. I think we're rolling past this top. If we fail to get above this 610 area, 611 area, then we are likely going to roll back down into these lower channels and attempt to, at some point, retest this recent low. Remember, you've got a couple of major lows setting up here on the SPY. One coming right across here at 595. A second coming right across here at 599.26. So in reality, guys, a breakdown at this level means we're coming down to 599 or 595, just below 595, and that puts us right back into the support zone. And really, we've got to get through. We've got to make a decision here in this middle zone. We're either trying to break this upper level, which it looks like it moved overnight to try to move a bit higher, but we're going to see how it holds up today. If it rolls, we've got the gap potential already covered. So the pattern is already pretty much covered with a gap potential. We get our gap, but a gap up like this oftentimes rolls back down. So let's pay attention to where we're at with this resistance area, what drove this big move on Monday, and whether or not we're going to fail again up at this area and come back down. So remember, a move theoretically above, call it 609, 610 on the SPY would likely be fairly bullish for a little bit. A breakdown below, let's call it here, at 602 would be likely fairly bearish to the downside, and in between, we could see quite a bit of volatility. Okay, let's take a look at gold and silver. Pulling back, this is a 10-minute. Let's come back over here to hourly. Make sure that we're over here at hourly. So big move yesterday. Really minor little pullback over here in silver. I'm still looking for it to rally personally. The gold and silver side of the market is a temporary bottom today, moving into a crush pattern on Monday, which again could be a fairly big downtrend. So understand that Monday, a crush pattern in gold, if it is a downtrend, is going to reflect some panic selling in the metals. So if we take a look at this and we roll over here, we get over here to Monday, Sunday, Monday over here. If we're looking at a crush pattern, and it is sufficient. We might get a rally up here today, and then we may get some sort of a crush pattern on selling in Monday. Same type of thing here, rolling into a crush pattern maybe on Monday. A crush pattern normally is a pretty big downward move. And for metals to move down in this upward channel, I would think that it's some sort of a panic type of selling. Now, this is interesting because this pattern on Monday with the breakaway could be a fairly strong rejection. In other words, it could be just like we saw back over here on Monday. So we may hover around this upper area, stay kind of in this zone, 600 to 605, 606 today, and then maybe on Monday we get some big breakdown and it sends gold lower and sends the markets lower. But again, I'm looking for that topping pattern to play out over here, moving us into this lower zone back here. This is our deep V zone. I'm really looking for this lower zone to set up somewhere below, call it 595 on the SPY. We'll see if it plays out, but based on my research and patterns, that's kind of what I think is coming. Okay, let's take a look at Bitcoin, 104, 642. Still in that consolidation pattern. Let me draw the consolidation mode here. We're kind of moving, I would say, right across here with rejection. I'll draw it right here. So there's that consolidation mode. And purple is fine, I guess. You can see that we've, apexed through this peak, come back down here into the inverted excess phase peak pattern. We've moved back up into here. Now, hypothetically, guys, if we were to try to break away from this and invalidate this pattern, we would need to move below this level. I'll draw it in yellow. And then attempt to break down below this level. So in order for us to invalidate, I drew it right here. In order for us to invalidate, we would have to see a very big rotation down through these levels, taking out a new low. And at this point in time, if we do not invalidate, then we are going to attempt to consolidate into a channel. Now understand that this consolidation is setting up a new excess phase peak pattern. So let's deal with this consolidation first. If we do not invalidate, then the move would be to likely rally up out, set up a new excess phase peak pattern, and try to break out. This would end up being our ultimate high off of this pattern. This roll through flagging, through consolidation, up to the ultimate high. Now, if we were to look at this flagging setup, which is kind of setting up right now, try to make that a lighter color. Let's just make it light. Let's make it. There we go. So here we have another excess phase peak. This is a non-inverted bullish excess phase peak pattern. And this would basically indicate if we get failure and we stay away from this high, if we stay away from that 106, 430, call it 500 area, and we roll downward, then we're looking at a consolidation phase, and that consolidation phase is probably going to be right here before attempting to break lower, which may end up confirming this invalidation phase back to the downside. So you see how these things set up as both an A and B type of scenario. A is this orange or this brown color excess phase peak, moves through consolidation and moves higher. Or B, we get this little mini excess phase peak, breaking downward into consolidation, which kind of makes sense if we get the Monday crush pattern in gold and the breakaway. We'll see how it plays out today. I'm kind of thinking that today might be fairly narrow within the 10. If we don't get a breakdown or a big rally, I would think that it's going to stay in this mode. I would think that it's run into a lot of consolidation. And remember, this is a 2-hour chart. We've gone ahead and played through these apexing patterns. We're barely getting above these levels here. This is our next resistance area, 106,950, 107. We're failing. You can see we failed right here and we pulled back down. At this point, I think that the markets are struggling for, I know they're struggling for direction. I can tell you honestly, this is very clearly saying that the markets just don't know what's coming. And I think this is going to play out as a downside move coming into February and March. I think that Q1 is going to be okay, but I think we're going to have a lot of disruption, particularly in Washington, D.C., and in the legal system. I think it's going to play out as uncertain markets for the next 60, 90 days at least. So where we're at with this, guys, is, kind of hard for me to pick a direction today because I think that with the SPY, the gap up, this is 2-hour. We're still at 107.84. We're coming off a little bit. This gap up higher could roll down into this mode. I think that's a very solid potential move back down here into 598. I think that it's going to, it got a good gap here depending on where we're open. I think it's going to try to fill and move back down into this lower support area, 600, maybe a little lower. And that may play out as a Monday breakdown again with our crush pattern in gold, indicating that metals may move strongly to the downside, which would indicate a panic mode, possibly something taking place. And now, again, that could invalidate by going higher. So we've got to see how this plays out right now. We're basically building a flagging type of a pennant formation. So come out here, depending on where we open and where the high is. Come out here, come across these lows. We're kind of building this flagging formation here, which again is indicative of indecision. And let's come back here. I mean, in theory, we probably have that same flagging coming from down here across this area. Yeah, pretty much. And look, that apex hits on Monday. So that hits on Monday at the end of the day. So anywhere pretty much between today and Monday, we're going to be trying to, depending on what happens today, break out of this potential apex mode. I'll leave it there. And that sets up another volatility zone. So we're going to get into some really volatile trading here. And in the meantime, we're just going to play it out, see what happens. And like I said, pay attention to the fact that we're moving into these deeper patterns. Okay. We've got these breakdown lows that I think are playing out. And again, the topping pattern that I called back over here was about a day or two early, but it rolled. And now I think that topping pattern is going to move into consolidation and weakness, prompting a move maybe down to this 580, 586 area, maybe a bit lower. We just need to see how this plays out, guys. Okay. Right now, I'm still looking for a downward move into that V bottom setup. So I would not be overly aggressive to the upside. All right, guys, go get some today. Happy Friday.